Morning, Steve Free in Chicago with the morning grain comments. It's Tuesday. Sometimes we talk about turnaround Tuesday, and you've got the grains up, crude up, the dollar's up. So kind of reversing a little bit of what we saw yesterday. As far as the headlines are concerned, first of all, down in South America, looks like Brazil weather forecast is just a tad drier than it was yesterday. That could be supporting prices. It's also interesting that Brazil's soybean bases continue to fall, and some people feel that's kind of an indication that at some point in time there will be a deal between U.S. and China might look at buying more U.S. beans than Brazil during the Brazil harvest. We also note that the Brazilian corn basis level continues to firm. That suggests they may be running out of corn, and that for the next maybe month or two, U.S. will be competitive for world corn buyers. We also noted that in South Africa, their futures markets are up sharply. They're in dry conditions there, and so their corn crop could be declining as far as crop ratings are concerned. No end to the partial shutdown. We don't have any data on new export sales or CFTC commitments to traders, or another day of delayed from the data coming from the January 11th crop report. Yesterday it seemed like the President of the United States was pretty committed that he's not ready to give in yet on a new deal. So that kind of limits some of the information that the market normally trades on and keeps us in a relatively quiet trading range. There is concern that once this data is available, we can have a pretty violent reaction if it all comes out at once. We also noted that in a rare announcement that China says they have culled about 1 million hogs on 100 outbreaks of this African swine fever. The disease has reached 24 provinces, and China last year slaughtered almost 700 million hogs. We had noted that the Chinese soybean meal prices had dropped 9% in the past month amid demand concerns that the fever continues to spread. So that is something in the back of people's minds, that maybe China won't need as much soybean imports because of this disease. We also have a notebook crush today for the month of December. We expect a record crush, and that it's going to be up from last year's 166 million bushels. We did note that the funds yesterday were sellers of beans, meal, and also wheat, and they were buyers of a little bit of corn. Continue to show a net position in the grains that's relatively small compared to last year's big short position going into the South American weather situation. So again, cash basis wise, here in the United States, it seems like the basis levels are getting weaker. We're hearing that soybean crushers have good ownership, corn crushers have good ownership, and the farmer has a lot of beans and corn to sell from last year's crop. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.